Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the week ended January 22nd, 2019. That's a Wednesday time period that we actually checked. For the first week in three, we saw conventional fund business witnessed net inflows this week to the tune of about $6.6 billion. And if we take a look at the news that helped with that particular piece, we know that there was a ton of information that came out. We saw that the Sino-American trade deal actually got signed. For sure, it was just phase one deal. We saw the United States Congress actually passed a deal for the Canada-Mexico agreement, and we saw a really good, strong start to the fourth quarter earnings season. And last thing, there was good economic news about just about everywhere you look. So it was really quite a good week for flows goes. During the week, Fund Flows Week, we saw that the three broad-based indices that are followed, the NASDAQ, the S&P 500, and the Dow, actually hit record closes during the week. So, and they were at various times. I think we had one day out of the four. Remember, this was a Martin Luther King shortened trading week, but there was a day that we actually lost. I believe it was on Tuesday. We had a downside performance, but every other day was actually upside. Let's go ahead and see how these pieces of news actually panned out into our fund flows reports. We'll take a look at our macro groups. Equity funds lost about $1.9 billion. Keep in mind, I told you it was a strong week for performance and everything was up. Equity funds from a conventional fund business, just kept on doing what they're doing, handing back money. $1.9 billion this week. Taxable bond funds took in about $5.4 billion. Muni bond funds took in about $1.9 billion. And we saw money market funds take in $1.2 billion. That's right. We're not talking $10 billion or $20 billion. We're just talking $1.2 billion as people get back to normal. Let's go ahead and take a look at the play-by-play of the actual macro groups themselves. Let's start out with equity funds. Equity funds had a good return this week, 0.54% return overall. Seventh consecutive week they've seen plus side performance. It's the fourth consecutive week, though, we've seen outflows, $1.9 billion, as I said earlier. And if we break that down a little bit further, we see domestic equity funds actually lost about $3.1 billion. Fourth consecutive week they've seen outflows. And we also saw that they had a plus side performance of 0.76%. Also for the seventh consecutive week, we saw non-domestic equity funds take in money, $1.2 billion, and this is the first week in 10 they've taken in net new money, but they only had a return of 0.08%. That's the seventh consecutive week, though, that they've actually seen those type of those plus side returns. So they've had some good news as well. If we take a closer look, we see that the large cap funds basically saw about $2 billion in outflows. We saw the small cap funds lose about $707 million in outflows. But if we look at the international side, international equities, that's where the interest was. $1.3 billion of net new money came into there, while global equity funds lost about $108 million. Not really a lot to write home about on that one. So now if we go ahead and take a look, actually I wanted to stop. Let me backpedal a little bit. 2019, we see the equity funds lost $294 billion. Let me remind you guys that we had 24% return for the average equity fund in 2019. Wow, right? So $294 billion outflows, that does not include ETFs. So a little bit later on, we'll talk about the ETFs. 2020, we're continuing on with the same pattern. 2020 year to date, we've seen $25.9 billion in outflows. So I think that's quite a story that we're going to be talking about here in the future. So let's go ahead and turn our attentions to equity ETF side of the ledger and take a look at the slide here. If we take a look here, we saw equity funds saw for the fifth consecutive week at $2 billion in inflows. Not the big numbers we've been seeing, but $2 billion is certainly respectable. iShares ESG MSCI USA ETF saw the biggest inflows, about $1.6 billion. iShares ESG MSCI Emerging Market ETF saw about $1.2 billion. And on the bottom side of this, we saw that the Spider S&P 500 basically saw outflows, and we saw the Invesco QQQ Trust 1 ETF lose about $2.5 billion. So $2.9 billion for S&P 500 and $2.5 billion for QQQ. Now, equity in the ETFs 2019 estimated flows for the entire year, remember we were big negative on the open-end fund, was just $97.5 billion. So kind of the question to ask is, where did that money go? Well, we're going to find out in a little bit. There's going to be really people plot a ton of money into fixed income and even more into money market funds. But 2020 year-to-date flows into ETFs was about $15.6 billion on the plus side so far. So again, the trend that we've been seeing recently certainly has stuck around. Let's go ahead now and turn our attention to the fixed income side of the universe. If we take a look at the fixed income side of the universe, we see that fixed incomes saw about for the third consecutive week, saw about $5.4 billion come into into their coffers. Seventh consecutive week, they've seen upside performance, 0.21%. And the big attractor of investors' money was $3.1 billion went into corporate investment grade debt funds, and flexible portfolio funds basically saw about $1.2 billion. On the downside, we saw only one group that really lost a lot of money here. Government Treasury money market funds lost about $180 million, and that's kind of the story there. Let's go ahead now and I'm going to back up again. Sorry about that. Back up and talk about the taxable bond funds. Taxable bond funds in 2019 took in about $192 billion. That's a ton of money. Remember I told you, the money's going out of somewhere, and it's not just going into passively managed ETFs. It's going into safety, and it's going into yield. So we saw $192 billion going into fixed income funds for 2019, and the 2020 year-to-date amount is $20.6 billion. So that trend is certainly continuing on as well. So now let's go ahead and turn our attentions back towards the taxable fixed income, but on the ETF side, and get the story up there. Let's go ahead and take a look at that macro group. That macro group basically saw that the fixed income ETFs took in about $3 billion. Seventh consecutive week, they've seen money come into their coffers. Fifth consecutive week, they've had plus side performance. The average return is about 0.15%. And at the top of the charts, we see that the iShares, MBS, mortgage-backed security ETF, sorry about that, MBB, took in about $682 million, and we saw the iShares 0 to 5, 0 to high yield corporate bond fund, that's SHYG, by the way, taking about $554 billion. And then if we take a look at the bottom, we see that there was outflows from Spider, Bloomberg, Barclays High Yield Bond Fund, J&K, $726 million in outflows, and Van Eck Vectors JPM Emerging Market Local Currency Bond ETF losing about $238 million. So now that brings us to our next group. But again, I'm going to back up and talk about what we've seen so far as year-to-date flows go. 2019, we saw $124.6 billion come to that group. Again, a monster amount in comparison, right? If we're taking a look at, from equities and what was going on. And then year to date, we've seen about $12.3 billion come into that group. So really, we're seeing people put money back to work in bigger numbers now into ETFs than they have before. I did a quick study, 2019 overall, if we take a look at passive versus active, and we're looking at the ETF arena and the conventional fund business on the fixed income side, while the TNA is quite different, actively managed still predominates in the fixed income world. We saw it reach about parity in 2019, so about 124 in each of those groups for 2019 inflows. So that was a big thing. Let's go ahead now and turn our attentions to tax-exempt fixed income macro group and see what happened in that group. So as we take a look at this, muni bond funds actually for the 55th consecutive week took in net new money, $1.9 billion. And over the last several weeks, we've been seeing 1.9, 2.2, 2.3. This has been a trend that's continued on. 2019 turned out to be one of the biggest flows for muni bond funds that we've seen on record going back to 1992 when we started doing weekly flows. Fourth consecutive week, though, that we've seen plus side performance, this time to the tune of 0.19%. And then if we take a look at the winners and losers, we see the general insured muni bond funds basically took in $617 million. High yield muni bond funds took in $468. And if we take a look then at the muni ETFs, we saw about $62 million come in. This is the 16th consecutive week that they've seen net inflows into that group. Now again, as I was talking about, so muni bond funds, and I'm going to take conventional funds and ETFs and add those together. 2019, we saw $96.5 billion enter that group. Again, record setting. 2020 year to date, we're talking about $7.2 billion, so that certainly is continuing on with the trends that we've seen as of late. Now let's go ahead and take a look at our last macro group, and that'll be our money market funds group. And our money market funds group basically, again, has a little bit of change here when we're taking a look at it, but basically we saw money market funds for the fourth week in 5 take in money, $1.2 billion, and the taxable money market funds basically took in $2.9 billion of that money, with institutional taxable money market funds accounting for $3.2 billion in inflows, and we saw that the retail money market funds took in about $270 million in inflows. So most of the institutional money, and that can be your 401ks, it doesn't have to be institutional investors nonetheless, saw the big inflows though, and that was one of the stories that we wanted to tell you about. Tax-exempt money market funds saw outflows about $1.7 billion, and year to date, This is the big number, 2019. For the entire 2019 period, we saw $541.6 billion come into the group. That's a monster, $500 billion, over $500 billion. So obviously a lot of money sitting on the sideline, getting ready to be put back to work. And we don't know where that's going to be. We're at the top of the market, maybe. We might have some legs in the market left, but investors certainly seem to be putting it back into fixed income fund, despite having one of our best equity market returns in over a decade. 2020 year-to-date flows into this group, money market funds, was actually a minus $2.6 billion. So we know that investors are actually putting some of that money to work and doing it that way. Well, that probably brings us to our end, but what we're going to be doing is keeping a keen eye on Q4 earnings season. It started off with a bang. We've had some really good news over the last couple of reporters that came out. Obviously, we're going to keep a close eye on that. People obviously going to keep an eye on other market-related stuff, and maybe even a short eye. I don't think people have paid a lot of attention to the impeachment of the president, to be honest with you, from the market point of view. But certainly that is something that could play into it as well. So if you want to do a deeper dive, or I didn't do a deep enough dive for you, you can go to our site, www.libertyusfundflows.com, and do a deeper dive yourself. If not, you can join us next week. One of our analysts will talk about the flows trends for the week. Thanks for joining me. My name is Tom Roseen, wishing you the best in your wealth planning and creation.